Hey, Mark, back with you, and I want to talk to you about a strategy that I also personally employ that does create 100% passive income. And it's all about having top stocks such as Tesla pay you income every month. It's a fairly new method, and it generates monthly passive income that's powered by some of the world's most outstanding companies without having to lift a finger. I definitely suggest going back and watching the last couple videos in order to learn more about creating 100% passive income. So let's talk about this strategy today. This is all about getting paid by the world's largest companies. I do want to put a risk disclosure up first. I'm going to be talking about trading and investing, and there's always risk when it comes to your investments. So make sure that you understand that going in, you can lose money. As you know right now, you can buy stocks in the top companies in the world. Apple, Microsoft, Amazon, Google, and on and on. And by buying one stock, you have fractionally invested in any company that is publicly traded, including the best companies in the world. The problem is there's over 5,000 companies to choose from, over 10 billion shares of stock traded every day, and over $50 trillion of market value. It's great that you can own a small sliver of it, but it's really difficult many times to make the decisions on which stocks to trade. You can buy stock of Netflix, Amazon, Apple, Tesla, Visa, Microsoft, but I would have to list off 5,000 plus stocks here to give you a list of all your potential options. That can be quite challenging. Let's just assume for a moment that you buy stock in Apple, right? Great company, one of the most valuable in the world, and you can own a fraction of Apple. This is a chart of Apple stock on a weekly basis over the last 2.5 years. It's obviously had a very good run recently, as we can see. The problem is, I think you would agree, looking at this chart, if you don't buy this perfectly and time it perfectly, you may very well not make any money. For instance, if you happen to buy here, you would have had to endure a year and a half until you got back to break even, despite this amazing rally. Now, if you were the perfect market timer and you bought down here right at the beginning of 2023, absolutely, you would have made a really nice profit. It's not that easy to be a market timer. There's just no way to perfectly buy lows and perfectly sell highs. Nobody can do it. Nobody can perfectly time the markets, and all investors are wrong a good part of the time, even successful investors. So I don't think it's an exaggeration. You need a lot of luck, you need a lot of ideal timing, and definitely some skill. But I'm telling you, a lot of it comes from this part and just timing things perfectly. You really, a lot of times, need to be a stock picking genius to get it just right. Now, there are ways to diversify further where you can buy a basket, a collection of stocks, just in case you pick a single stock and it turns out that it was a bad investment. It's not easy to be a stock picker. So instead, you can buy shares in what's called an index ETF, and you're essentially buying a tiny piece of all the companies in that index. And that definitely is simpler, and it certainly can be less risky way to invest compared to buying individual stocks. Two of those stocks you can buy where there's millions of shares traded every day are the SPY, which follows the S&P 500, the 500 top stocks in the US, or the QQQ, which is the top NASDAQ 100 stocks, which tends to be mostly technology stocks. Just a few of the stocks in the SPY, you probably recognize virtually all of these names. So let's take a look at the SPY chart. Again, you're getting the same vibes, right, as Apple. There's certainly been huge rallies at times. This was the peak towards the end of 2022. It was an amazing, epic run up. But then last year was pretty brutal. Now we're back up again. It's hard to make sense of all this. If you bought anywhere up here, you're still losing money after all of this time, and you're not able to take really any income out of this market. Despite the fact that it's heavily diversified, there's still some real challenges here. And you know what? One bad story, one news event, something unexpected can wreck it, and you just hardly get any cash flow at all. The only time you're actually going to book profit that you can spend is you have to sell. And then what happens when you sell? Then you have to determine what to buy next. And we just saw it's not that easy being a stock picking genius. How about we add some cash flow to the mix? Because the problem with what I just showed you is you really don't generate any ongoing cash flow, very little from Apple. They pay a very tiny dividend. It's less than 1%. And even with the SPY, there's a tiny bit of dividends, really not enough to generate regular income. You can buy a stock that pays a regular dividend on a quarterly basis. So a lot of big companies will pay you a profit share. The issue is, or the challenge is, a lot of times that tends to be 1.5% to 2% overall, maybe 3 or 4% at times. There are a few that pay much higher than that, but there tends to be some problems and some risks usually with those stocks. But dividend stocks for sure can be a way to start at least generating some regular quarterly income from your stock trades. Household names, Johnson Johnson pays close to about 3% and 3M close to 6%, Exxon about 3.5%, and they pay these on a quarterly basis. So you can participate in upside if those stocks go up, but even if they don't go up, you do get cash flow. That should be a light bulb moment for you where there is an opportunity, even if a stock goes down, to continue to collect regular income. And you don't have to sell the stock to generate income. Sure, if the stock goes down, you're losing on paper, but it is nice to know that every quarter you will be paid for ownership of those stocks. What if there was a way to combine the appreciation potential of a stock and regular cash flow, but not just do it quarterly, do it every single month? The stock that I want you to consider and learn about is TSLY. This is going to be based upon Tesla, right? One of the most high flying stocks out there. And it's the Tesla Options Income Strategy ETF. I know it's a mouthful, but let me tell you more about TSLY and the potential opportunity for you. What you may not know, if this is new to you, is that TSLY right now has over 8 million shares a week being traded. In fact, sometimes over 10 million shares. And you can easily buy it at any online broker, including Schwab, Robinhood, TD Ameritrade, and dozens of other brokers, many times without even paying a commission. You can buy it in seconds. You can sell it in seconds. It pays you a dividend, not every quarter, but every month, and a very high dividend at that. When you see something that can pay you 60 to 70% projected over a 12-month period, that should really jump off of the screen, right? And it does it monthly. Now, it does also vary on a monthly basis, so there's no guarantee that it's going to stay at this level. Sometimes it's lower, sometimes it's higher. A lot depends upon market volatility. But one of the real keys to this is you earn monthly dividends regardless of whether the stock goes up or down. You're going to receive that dividend payment. And what you can do with that payment is you can spend it like income. You can decide to reinvest it and compound it, which I'll talk to you about in the next video, which is the way to rapidly accelerate your gains, or a mix of the two, which is actually my suggestion, where you can pay yourself some and reinvest a portion of it. So the pros here is you get a monthly income regardless of the price of Tesla because it will track the price of Tesla. And I'm going to show you on a chart how it does that and how close it comes to Tesla. But you still get to participate in some of the upside. If there's a big sell-off in Tesla, it tends to, on a percentage basis, lose a little bit less than Tesla. But regardless, Tesla could be in a long bear market. It will continue to pay you income on a regular basis. Now, it doesn't mean that TSLY on a dollar value isn't going down. It will go down on paper in price, but you continue to receive the income on a monthly basis. This is a chart of Tesla on its own. So you can see again, like the other charts, it's a roller coaster. If you don't time this perfectly, you could have bought up here, and at this point, you're still losing money over a year and a half later, despite the amazing rally we've had this year in the price of Tesla. Market timing is a really tough thing to do. If you look at the long history of Tesla, the returns are spectacular. But how many people do you know that bought Tesla, right, when it was cheap, $5 a share, and right now it's at 260? Look, there are people who did, but probably 99% of the people who've owned Tesla along the years did not. I've owned Tesla multiple times. I can tell you I did not, certainly, buy it early and hold it through all these times. It's really hard to hold on during these type of moves to the upside. People just tend to sell into strength. And you're worried that this is going to happen next. That's the concern. TSLY is a way to participate in some of the upside of Tesla. And I believe you'll have a better chance of staying with the investment even in a downturn. Now, there are definitely cons. It is not perfect. You will absolutely not capture all of the upside during a Tesla stock rally. So if you purely want to buy Tesla and you want all of the stock appreciation, then you got to buy the stock. That's just the way to do it. But understand you're not going to get any income until you time it perfectly and you sell into a rally and you gain that profit. Then you need to decide what are you going to do with it next. Are you going to try to make another perfectly timed stock investment? Not easy to do multiple perfectly timed stock investments in a row. This is a great way to explain that. You see the line chart here? That is the chart of the closing prices of Tesla. This bar chart here is TSLY with dividends reinvested. So you can see clearly when Tesla had this huge rally recently, it goes up further, right? We are capping our returns on TSLY because it uses a very unique option strategy. You don't need to know how to do it. It's 100% passive, but it uses a strategy in order to generate that monthly income for you. So the way that it does this, it actually owns very little Tesla stock. What they do is they end up buying options, and they buy them 6 months to a year out. So it's what's called a synthetic long. So they own Tesla by owning options to purchase Tesla shares 6 to 12 months out. Then they sell an options contract above the current stock price on the stock each month. That's how they collect income and then distribute that income to you. You're basically, in this case, the landlord. It's like a rent that you're collecting, and that gets distributed to you on a monthly basis. Now, I know it can be a little complicated if you're not familiar with options. The great news is this is 100% passive. You don't do any of the work. You're not running the strategy, but I like to explain it at least so there's some understanding of what happens here. Because they are selling these options above the market, if price goes through that price, that's why you end up getting capped on some of the upside and the big moves up. But the flip side is every single month they generate income that then gets distributed to you. Like I mentioned, you don't need to be a master in any of this. You just need to understand the most basic concept. It's all 100% passive and pays monthly cash flow. Just buy the stock and the rest is automatic. Now, there is risk in trading, so you do have to be aware losses can occur. We can't guarantee that if you buy TSLY, the price of TSLY won't go down. It will if the price of Tesla goes down. Just understand that your stock price itself will go up and down just like Tesla goes up and down. It's a highly volatile stock. But you can continue to enjoy the cash flow regardless, so you don't have to sell, just withdraw or reinvest those dividends to compound your investment and buy more shares over time. My opinion is you're far more likely to stay invested when you know you're receiving cash flow and you're not going to panic out at the worst time. Tesla is selling off sharply and TSLY also is going down in value. I think you're less likely to sell because you're still going to receive income this month. Just reinvest that income and buy more shares of TSLY at a cheaper price. Or you can take part of it as income and you can reinvest part of it. Or you can take it all as income if you prefer. And where else can you receive this level of passive income? I already mentioned 50, 60, 70% on a year is possible. Now, I recommend, like I mentioned, you reinvest some of that back into TSLY. I'm going to cover other opportunities like this in just a few days. So here's how straightforward it is. This is all you need to do. This is the formula. Open a trade account if you don't already have one at any broker, such as Robinhood, Schwab, TD Ameritrade, E-Trade. Most of the times, there's very little to no minimums. You can start with very little money. You purchase one share of TSLY if you want. It's under $20. Or you can purchase 10, 100, 1,000, 10,000 shares. You will get paid monthly income. Then definitely come back to the video tomorrow where I'm going to talk to you about why dollar cost averaging can really snowball the returns you can make, including on a stock like TSLY. Now, comment down below. I'm really curious. Have you ever invested in dividend stocks of any sort? Have you ever heard of covered call ETFs? Have you invested in any? Are these brand new to you? Or is anything unclear that I explained to you today? I would love to help you with that. So comment down below. So what's next? I'm going to be holding a free live webinar next week, August 23rd at 12 p.m. Eastern. That's New York time, or 6 p.m. Eastern New York time, whichever time is best for you. I'm going to give you the links in a moment. These are free, no obligations. I'm going to reveal to you how I personally generate a six-figure income using passive investment strategies, just like I've been sharing with you in these videos. The links to attend are on the screen here. I'll also put it into the description of the video down below. So you see the links. The first one will get you into the 12 p.m. Eastern, 9 a.m. Pacific, and the second link is all you need to register for the 6 p.m. Eastern, 3 p.m. Pacific. I'm going to be sharing more of the type of investments that I do and more information on how you potentially can do this for yourself and create 100% passive income. All right, so leave your comment down below and then come back in tomorrow. I'm going to post another video, and this is what I call the snowball fortune effect. It's how to take everything I've shown you the last few days and compound and rapidly increase your potential returns over time without any effort. That's what I'm all about with this series, not putting forth a lot of work, effort, or time. I want to be able to invest once, and I want to be able to earn forever. So with that, thank you so much for listening, and we'll be back again with the next video.